Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC-TV18. Now, away from the macros, the Reserve Bank of India has dismissed Kotak Mahindra Bank's plan to dilute its promoter stake. Remember, earlier this month, Kotak Mahindra Bank had issued preference shares which helped Uday Kotak pay down his stake to around 19.7% from around that 30% odd mark. Abhishek's with us early this morning to run us through all those details. Hi Abhishek, good morning.
Good morning, Nigel. So to begin with this preference issue that you have spoken about, this does not meet the RBI's requirement of promoter holding, classification. Therefore, Kotak says that the bank will engage with RBI and believes that this preference issue actually is a tool that meets the requirement or the norms of RBI. However, this approval did come in a few weeks back in terms of, Kotak reducing his stake to 19.7 from about a little under 30% that it has currently. The impact of RBI's denial can be that the promoter will need to cut the stake to 20% from a little under 30% right now. So the alternative route that Kotak has by December 2018 is that either go through merger and acquisition or bring in fresh equity to pare down his stake or sell his own stake in the company. So there could be an overhang in terms of fresh equity issuance coming in and supply being more than the demand in the stock. So sources tell us that why this has happened is that RBI and FinMin, that is Finance Ministry, were against the move in the spirit. Both RBI and FinMin believe that this issuance can set a bad precedence for others to follow. Opposition seen from industry stalwarts on making mockery of the law, and the move seen is unfair as to others who have already diluted their stake to meet the RBI's requirement. Back to you.
Okay, all right. Thanks so much for that, Abhishek. Well, moving on then, the Prime Minister's office has asked the Finance Ministry to set up and enforcement against GST evaders. This after the Revenue Department submitted its report apprising the Finance Ministry and the PMO about the number of cases of GST evasion detected by the Central Board of Excise and Customs. Timsi Jaipuria has all those details about these developments. Timsi, how much GST evasion are we talking about here? What are the remedial measures being talking about even now?
As government shifts focus to plug all possible revenue leakages in the goods and services tax regime, Revenue Department has recently submitted a detailed status report to the Finance Minister and PMO on GST evasion. According to the report, CBIC has detected over 2,700 crore rupees of GST evasion during the first year of GST, that was between July 2017 and June 2018. Spread over 850 cases, government officials tell CNBC-TV18 that of this 2,700 crore rupees, 1,500 crore has been realized by the centre government from GST evaders, closing investigation in about 625 cases. Having said that, officials also indicate that maximum tax evasion detected was in the Mumbai zone, followed by Chennai and Ahmedabad. In Mumbai zone, 485 crores of tax evasion was detected, followed by Chennai, where 100 crores of evasion was detected, then Ahmedabad, where 50 crores of evasion was detected, and in Delhi, around 55 crores of tax evasion was detected. Now, also noting this trend, PMO has directed Finance Ministry to step up enforcement action against tax evaders to curb tax evasion. Following which, CBIC has now asked DG Intelligence and Field Formations to begin another fresh round of investigations to detect GST evasion. As per the investigations which have been conducted by DG Intelligence and Field Formations between July 2017 and July 2018, DG Intelligence has detected 1,560 crores of tax evasion from 320 cases, of which it has already realized 770 crores from 215 cases. Similarly, Field Formations have detected around 1,153 crores of tax evasion from 520 cases, and they have realized 780 crores from 408 cases. So let's see, the overall breakup is here. This is by DG Intelligence and this is by Field Formation Units. So let's see finally what happens, how soon this tax evasion business ends, and most importantly, what happens in the fresh round of investigations which is conducted by DG Intelligence and Field Formations, together put in front of the government to see how to plug in these revenue leakages. Back to you.
Okay, thanks very much for that. Well, on to some national news then. Former Prime Minister Atal Bihari Vajpayee's condition has worsened and he has been placed on life support system. The All India Institute of Medical Sciences released a medical bulletin at 10:30 p.m. last night, which said that the BJP stalwart's health has worsened over the last 24 hours. Prime Minister Narendra Modi and a host of other top leaders have visited the ailing leader at AIIMS earlier in the day. Vajpayee is 93 years old and has been hospitalized for over 9 weeks.
Well, and Kerala is facing the worst floods in history, and the condition continues to deteriorate due to the continuous downpour. Now, 72 persons have been killed so far, and the state government has declared a red alert in 14 districts of the state. The dams in the flood-ravaged state are already full, forcing authorities to open shutters of 33 dams. Now, nearly 90,000 people are in relief camps, and flight operations have been suspended at the Kochi International Airport. That's till 18th of August. The centre has already issued relief funds to the state, and Chief Minister Mr. Vijayan has said that the government was taking all necessary steps to reach out to the flood-affected people. Well, in Tuesday's trading session, Sun Pharma, it ended higher, but in fact, the quarter one numbers look quite good. They were above estimates. The revenue was up by nearly around 16%. The EBITDA as well jumped up more than 45% this time around. That's what caused the margins to expand. But Ekta, you were telling us earlier that on the con call, the management sounded quite positive. Run us through further details from there.
Yes, absolutely, Nigel. You know, I've heard the Sun Pharma call for years now. So there was a period in time for Sun Pharma's call where, the management sounded a little unsure about Halol, about approvals, about guidance, etc. And there was a marked turnaround in terms of the language of Sun Pharma. In fact, at one point in time, the management said that it's an execution problem for them, that there would be too many approvals which would be lined up and executing them would probably become an issue. So, it's probably a problem of plenty that Sun Pharma would be facing at some point in time. But nonetheless, in terms of the key highlights, the company is guided for 3 specialty launches in the US in FY19. Now, we've been pointing out that they have specialty launches such as Yonza, Odomzo, and a couple of other drugs which they've either launched or which they are going to launch soon enough in the market, such as Illumia, etc. So those kind of specialty products basically differentiate the company from just the pure generic play that they have in the US markets. They did say, however, that it's not a substitute for the generic market, it's a part of the business strategy. Separately, the company has retained its FY19 revenue guidance of low double-digit growth at this point in time. They're saying that R&D spending is at around 8 to 9% of sales, and there will be near-term margin pressure because of this kind of R&D that they have to undertake, and the fact that they have to undertake cost efficiency measures as well. Halol approvals should start picking up, so that's what the management has guided for. So overall, much better body language than what we've heard in previous quarters. In fact, let's listen in to the management talking on their Q1 numbers.
We continue to invest in R&D for enhancing our pipeline. Consolidated R&D investments for Q1 were 500 crores, accounting for 7% of sales. Our current generic pipeline for the US market includes 135 ANDAs and 3 ANDAs awaiting approval with the US FDA. We expect higher R&D spend in the coming quarters for the specialty business. We continue to record a gradual improvement in performance despite a challenging US generic pricing environment. Our US business has recorded growth both on year-on-year and quarter-on-quarter basis. We are gradually crossing key milestones in our specialty initiatives. As you all know, FY19 is an important year for our specialty business with 3 potential launches lined up in the US. Of this, we have already commercialized Yonsa, while we plan to commercialize Illumia and Sequa in the US in the coming quarters. Another important event during the quarter was the clearance of Halol facility by US FDA. With this development, we now expect a gradual improvement in our business and new approvals from Halol for the US market.
Okay, sticking with the pharma space, then Fortis Healthcare as well as in focus after the shareholders have approved the company's acquisition by Malaysia's IHH Healthcare. The company also reported a weak set of numbers in the past quarter. Ekta, tell us, what does all this mean?
Well, overall, the stock should be in the green because that uncertainty that the shareholders are going to approve the deal or not has actually not has gone through now. So it was almost a unanimous approval by the shareholders to give IHH the go-ahead to take over Fortis. So that should bode well in terms of the key primary trigger for today. The numbers remain weak. The Q1 revenue is down 10%, margins just about 0.8%, finance costs elevated at 76.4 crores, in fact higher year-on-year and Q-on-Q. But the company said that the hospital occupancy is picking up in Q2. It's 69% versus 62% on a Q-on-Q basis. That means in Q2, it's looking at 69% right now versus 62% in the previous quarter. And the company is targeting 70% occupancy in hospitals by Q4. But the primary trigger, like I mentioned, should be the shareholder approval.
Okay, all right. I expect that stock to open up in the green then. Shifting focus then to the insolvency space. And this one's an exclusive. The final bids for debt-ridden Bhushan Power were opened by the Committee of Creditors at COC, and there may be a surprise winner. Ritu Singh joins us now with all those details. Ritu.
That's right. In a surprising turn of events, it emerges that JSW Steel is the highest bidder for Bhushan Power. This after, in the first round, Tata Steel was the clear favourite. So sources tell us, in the Committee of Creditors meeting held today, JSW Steel had revised its offer to 19,700 crore rupees compared to Tata Steel, which maintained its original offer of 17,000 crore rupee repayment to lenders. So did Liberty House at 18,500 crore rupees. But sources also tell us that banks never believed Liberty House to be a serious player because they could not show a clear source of funds to make this large acquisition, whereas JSW Steel has been able to secure funding support from State Bank of India if it were to be the successful bidder to acquire Bhushan Power. So with this development, it looks like Tata Steel is pretty much out of the race and JSW might end up getting Bhushan Power. Of course, if there is to be a litigation, it remains to be seen whether Tata Steel will challenge this decision again in higher courts. But as of now, the 3 bids have been considered and, lenders will take the details of all of these 3 bids and submit it to the NCLAT where the Bhushan Power case is currently being heard.
Okay, thanks so much for that, Ritu. Remember, Ritu actually alerted us in Tuesday's trading session itself, and the stocks reacted as well because, what the street wants is that they don't want Tata Steel to be very, very ambitious, go ahead and be very, very aggressive for this asset. And that's why after Ritu, hinted this, we did see that Tata Steel recovered from the low point of the day. On the flip side, now in fact the street could be a little bit concerned whether or not JSW Steel is being over aggressive, and that's why that stock as well did come off the high point of the day. It virtually ended at the session's lows. Well, we'll slip into a short break. You come back, we'll shift focus, we'll tell you what's going on in the derivatives market. Stay with us.
Welcome back. Well, let's revisit the top story for today. The rupee has tumbled to an all-time low against the dollar. In a CNBC exclusive, former RBI Governor Raghuram Rajan says that the rupee hitting an all-time low is not much of a concern, adds that the state of emerging markets is way better than what it was in 2013.
It's early days, and I think the real problem is Turkey is an outlier, both in terms of the leverage that has built up over the years and the quality of policy, which has been pretty bad. So it may be an early warning. It may be something which doesn't spread more widely because Turkey is special. There are, of course, other countries which are in some situations of fragility because they have upcoming elections, they have a large current account deficit, they have a large fiscal deficit. But in general, emerging markets look a lot better than they looked in, say, 2013 when we had the taper tantrum. I think the rupee has been strengthening in real terms for quite some time. The inflation rate has been modest but slightly above world inflation rates. And as a result, the rupee needs a modest weakening over time. So I'm not too concerned about the rupee hitting an all-time low. It's more a factor of dollar strength rather than necessarily rupee weakness. But I would say that broadly, you want to look at countries with large current account deficits as well as a high level of debt.
All right, then let's shift focus to the derivatives market. Then Mangalam joins in to tell us what's going on in that front. Mangalam, looking nice and fresh. Looks like cricket was good yesterday, but tell us about the markets as well.
Cricket's always good, Nigel, tell you what. But what's not good is the FIIs in the cash market, because over the last 7 sessions, the FIIs bought in 4. We thought maybe the flows are back. And now with the rupee weakening, this is one trend I will definitely be watching out for. You've been talking about it as well. Maybe if the downside is limited, are FII is going to buy or not? For the last 3 trading sessions, we've seen a sale worth close to around 1,900 crores in the cash market. But interestingly, the Nifty futures premium, which was earlier 28, fell all the way down to 9.75, is now increasing back to levels of 28.5. But does that mean the FIIs are buying in index futures? Well, not for the last 2 trading sessions. In fact, on Tuesday's trading session as well, they sold about 700 odd crores. And the FII long exposure, which is still above 50%, has now fallen from 57% to 54% itself. Some purchase on the downside in terms of protection, about 1,000 crores bought in index options. Most of that was attributed towards additions of close to 10,000 long put contracts. There was some selling in the put contracts as well, but that was a little more than short call. So that means there is perhaps some support on the lower end. 11,400 put, that one saw some writing after we rose on Tuesday's trading session, and 11,500, that is one mark we will be watching out for. Call writers felt a little jittery out there. The Nifty Bank weekly options expiry, a couple of strikes which are very active. 27,800 put, which is about 200 points lower from here, and 28,500 call, which is about 300-400 points higher from here, are where the markers are placed. In terms of stocks, watch out for Sun Pharma, long positions added there, along with Balakrishna Industries.
Okay, all right, Mangalam, thanks very much for that. Let's go across to Manisha now, who joins in with an update on all the cues from the commodity currency space. Manisha?
Thank you so much for that. Well, currency, of course, is going to be in focus on what really happens to rupee, because we've seen offshore market actually see a very sharp dip for rupee. But I think there could be some help coming in from the fact that the Turkish lira has seen a bit of a surge in the international markets right now. But what really doesn't seem to be working here is the crude oil prices, down 3% overnight. The U.S. crude is trading at a 2-month lows. You have the Brent crude prices trading at a 4-month lows. And this is because the trade growth has peaked in the month of Jan, especially for the OECD countries. And that would mean a weaker demand estimate going forward. Apart from that, the U.S. weekly inventories have surged by 6.8 million barrels. That has been bearish for prices. The strength in U.S. dollar has been yet another thing. And the U.S.-Iran sanctions is something that the markets would keep a keen eye on. In the metal space, keep an eye on the copper prices, because we have seen that commodity decline 22% from its 52-week highs. So we have seen that get into a bearish territory. The strength in U.S. dollar, the China economic data, all of that has been on the weaker side. So the industrial metals is a space that you need to keep an eye on today as well.
Okay, all right. Thanks so much for that, Manisha. Well, on that note, we'll wrap up on Power Breakfast. We leave you with some picks of our bullseye contestants for day 3 of this week. Bazaar Morning Call comes up next.
Our first call is a buy call on Vocard for target of 654, stop loss 582. Second buy would be on Amara Raja Batteries for target of 900, stop loss 814. Third buy would be on Century Textiles for target of 956, stop loss at 894. And final call would be a buy call on BEML for target of 865, stop loss 774.
The first pick for the day is a buy on Amara Raja Batteries. The counter has closed around 846 odd levels. I would be looking to go long on around the current levels for an intraday target of 872 and a stop loss below 826. The second pick is a buy on Balakrishna Industries around the market price of 1340 for the targets of 1395 and a stop loss below 1296. The third pick is a buy on Ajanta Pharma. I would be looking to go long in the counter around current market price for the targets of 1220 and a stop loss below 1137. The last pick is a buy on Sun Pharma. I would be looking to go long in the counter around current prices for the targets of 632 and a stop loss below 584.
My first pick is Sun Pharma Advanced Research. I buy it with a day target of 398 and a stop loss of 370. Second, Hexaware. I buy it with a day target of 500 and a stop loss of 475. Third, Mindtree. I buy it with a day target of 1080 and a stop loss of 970. Fourth, Mangalore Refinery. I sell it with a day target of 74 and a stop loss of 86.